When you go through your charts, if the marketplace that you're looking at creates these scenarios where it's just really messy, what's the first thing you should consider? Closing the charts, turning your computer off, and go do something you love to do. Spend time with your family, good friends, and hobby chasing, whatever it is you're doing otherwise outside of the markets, which is what all of you should have, a hobby outside of this, not just watch my videos or someone else's stuff. Have something that you do outside of trading, because you have to have an outlet, and otherwise you're going to burn out. But when the markets look like this, you don't touch them. I'm not talking about my community knows that I have not been really, and it breaks my heart because this has always been my favorite pair, but I have not been touching British pound for a long time. Months have gone by. I've not done one trade in this currency pair because it's just simply not delivering what I'm looking for. Now, some of you are thinking, oh, there's proof right there. They're changing the algorithm. No, it's just a mess right now. The whole world's all messed up, and trade has been affected by that. So it's going to show its hand and manifest itself in the currencies. And this is what you have. Trust me, folks, in the offing, just over the horizon, there's something about to happen. And when that happens, these markets are going to get real excited, and they're going to be moving around a lot. And everybody's going to be like, man, I want to go and trade Forex. Trust me, that day's coming. What day is it exactly? I don't know. But I'm being patient until it manifests itself. When it does, you're going to know it. Everybody's going to know it. But when it creates that, man, it's going to be what I call salad days. It just means easy trading. So don't get bummed out by looking at this and thinking, oh, this is actually a good thing, because it teaches you when not to be doing anything. When it feels alien, it feels counterintuitive or counterproductive or the opposite of what you're in here learning about. You're thinking, I'm learning how to do this, so I should be able to open up a chart and go and find a setup. Yes, that's reasonable for a neophyte, but you want to learn how to do this profitably, right? I mean, I would hope you would want that. You want to do things consistently, right? Hopefully that's what you're trying to do. I'm trying to promote that in you. Maybe that's not what you thought about when you first started, but you want to be able to know why you're doing something and when not to do it. Knowing when not to do something is crucial because it'll keep you from blowing your account. It'll keep you from being undisciplined, and it'll give you peace of mind. It'll remove that fear of missing out. I don't have any fear of missing any of this price action here. I'm not losing any sleep over it. And you shouldn't either. And when your market, whatever that market is performing like this, just leave it alone. Take a break. You don't need to trade today. You don't need to trade tomorrow. If you feel that, understand this and listen, okay? Put the potato chips down. Put your drink down. Listen. You do not need to trade every single day. Despite what you're thinking and feeling, you don't. What you need to do is understand why today or tomorrow is a day that's highly probable that your bias will deliver to a target that you already know is likely to be traded to. But you have to have an expectation of where it's going to go. Where is it going next, higher or lower? If you can't reasonably outline that, then you're gambling. And if you're trying to trade every day, or you have this impulse that you have to be trading, you have to be in there, you have to be doing it, that's a gambler's mentality. I do not promote gamblers. I do not promote gambling. I do not promote over leveraging. I do not promote lucky over leveraged trading. I promote one contract, work on trying to double your account. How long does it take? I don't know. How long is it going to take you? I don't know. But that should be your goal. Work with the lowest leverage and try to double your account. If you don't have the patience to do that, you're a gambler. You're trying to rush to make big money. And there's only one end result that comes from that. You blow your account. I'm telling you folks, if you don't believe me, watch when you try to do it. And you're going to be coming back and saying in the comment section, you were right, I wish I would have listened. And then the true test is, will you repeat the same error? Thinking you just weren't schooled enough yet. Okay, you didn't have the skill set yet. Now you do, because you watched 2 more videos. And then you do it again. Then you'll write in the comment section, I just blew my account because I didn't do this and I didn't do that. What's wrong with me? I'm telling you what's wrong with you. You're rushing and you're gambling. And I don't teach that. So you're doing what? Everything I'm telling you not to do. So are you really ready to be taught? No. Once you break yourself and you have no more money in your account and you have no more money to put back in the account and you are questioning whether or not trading is for you, that is the student that's ready, because they have nothing to go in and gamble with, and it's all up from there. Or they say, trading's not for me. And guess what? That's the right decision, because you know yourself better than anyone else. If you decide that, you know what, I've tried this, I've tried that, it isn't working, trading's not for me. Well, God bless you. You've probably saved yourself a fortune, because there's a lot of people that this will never work for, because they are not disciplined. They're not responsible. They're not going to follow the rules, and they're not going to do things as they were taught. And they'll find fault with everything but themselves. And that is mental illness. I experienced it.
All right, so we're watching price this morning, first trading day of the year. I went short on 2 fair value gaps and one at the top of the orange fair value gap at 38.60. Looking for a continuation down into the levels I shared on Twitter. Initially, I thought that we would get 39.20 as a run-up, aggressive run, as a Judas swing, like a fake rally aggressive during the PMI numbers at 9:45. The market was not having that. So that's why I said we have to wait and see what the market does. It failed to run above the 39.05 level. So I waited for the shift in market structure at just below 38.72 and 3/4, 73. And then return back into a fair value gap. You can see the entries on the left-hand side on that 1-minute chart. Broke down, traded to gain another short entry into the fair value gap and also bearish order block. And the third entry is at the top of the orange fair value gap at 38.60 as it traded up into that, looking for heaviness going down into the 38.39 level. So I took one partial, leaving 2 contracts on, and I want to get below that 38.42.50 level. That's where sell side is. You can see that noted on the right hand side on a 30-minute chart. Now, why am I using a 30-minute chart? I want to see price remain below that fair value gap here on the left hand side. If it goes above that, then I'll probably have to want to close the trade. That's what I'm thinking, but I want to see it remain heavy. Heavy means I want to see it go lower and have difficulty rallying higher. And if we trade down below 38.42.50, I will take one off, but rejecting that 39.20 level, like I was expecting, that daily volume imbalance up there, right hand side chart, that upper orange level, that to me was a likelihood of a draw on the news driver. Okay, but I'll take another partial off here, and we'll see if it wants to go down and take that. I made a low-hanging fruit objective now, and we'll see if we get that. Boom.